Yo, what's the dealio, man? Listen, you already know I got a banger for you. All right? So, listen, in this video, what I want to talk about is the great question that we all ask ourselves, right? What is that question? Should I get out and take profits or should I stay in? Should I get out and take this L or should I stay in? Right? To take profits or to take the L? That is the question, right? Y'all remember that? So listen, I want to talk about that today. I want to break down some stuff on the charts so that way you guys understand and you're able to think through this stuff on your own so you don't feel helpless, right? Or you don't feel like you're just doing something out of fear or whatever the case is, all right? So before we do that, I want to say shout out to everybody who be tapping in, watching the videos, commenting, liking, subscribing, sharing it with people that you know. I appreciate all of that, man. All right. So I just want to take a quick second to exude some gratitude and appreciation, man. I appreciate everybody who's tapping in. I show up every day to change your life. All right. So I hope that I'm delivering on that. So I saw something online. And this is perfect for what we're gonna talk about today. All right. So check this out right here. Okay. Right here it says every one of them calls for a different, unique set of skill set. Right. We got a scalper, a day trader, and a swing trader. Now you see a scalper, they have small amount of time, higher stress, higher risk, and higher reward. Right. A day trader is, a medium amount of time, a medium amount of stress, and a medium amount of risk, right? And a little bit more reward, or a little bit less reward than the scalper, okay? The swing trader has all the time in the world, has very minimal stress, has very little risk, big picture, and then the reward is greater than the risk, all right? So the day trader, it says the reward is a little bit greater than the risk. The risk and the reward on a scalper are about the same, but they're high as well, right? So I just wanted to share this with you real quick, man, just to give you a visual of, trading and trying to get your mind thinking a little bit different. So now we're talking about taking trades, right? Taking profit or taking the loss if you have to do so. Which one should you do? So what we're going to talk about is the foundation first. So first off, the foundation is going to be, I want you to understand this. When you're scalp trading, you're going to have, like the photo said, right? It's less time. So you have to know what type of trade am I taking? I always say this, all right? What's a rule that I always say? Never let a day trade become a swing trade, okay? Never let a scalp trade become a swing trade. So what does that mean? Before you click buy, right? Before you click, I'm getting into this trade, you need to know what the plan is here. All right. What is the plan? You have to know what the plan is. So let's say we're gonna go through some examples. All right. But if you get into a scalp trade, you may be just trading a candle, literally one candle, right? You might trade one candle, one 30-minute candle, and the stock might move $1, and you might scalp that. You might scalp 2 to 3 5-minute candles. That's 15 minutes, right? So, or you might day trade a day, right? You may see it as support, get in and ride it up until it hits resistance or until it hits, a level of resistance, right? That's day trading. Swing trading, you may ride at your levels as well, but the levels are going to be bigger because you're basing things off of a bigger time frame. So with that being said, you need to know what you're doing. You need to know what type of trade are you taking before we even think about should I get in or should I get out. All right. And then you want to know what level are you entering the trade at, right? That's very important. What level are you entering the trade at? That is so important, because that's what's going to help you know if you need to stay in or stay out or get out, right? So we're going to go to the charts, man. Y'all know I like these charts, and we're going to break it down like Charlie Brown. All right, so let's check this out. Here we go. Now, doesn't matter the stock, right? Let's go to Tempest. All right, I think this is a good example. Okay, it's Bitcoin. All right, so Tempest, right? So let's say I wanted to take this trade today. All right, let's say I wanted to take this trade today. And let's say I'm like, okay, this is resistance. Okay, this is resistance right here. And this is on a scalp trade. All right, it's on a scalp trade. So this right here is a resistance level. All right. Now, let's say I'm like, okay, I'm trading off the 5 or the 15. In this case, it's the 30-minute. So it closes right here, right? It closes right here, and this new candle opens up, and you're like, ooh, I want to get into calls, right? So let's say you take an entry right here, okay? You take an entry right here, and now you're in the scalp trade. And you're like, and let's say the stock is right here, right? You may say, okay, should I get out? Should I stay in, right? I'm down 10, 15%. So a couple things to think about, right? Couple things to think about. So number one, I said, what is the level that you're entering the trade at, right? So at this point, you're entering in a call at resistance. It hasn't convincingly broke above resistance yet, right? The next thing is, how much did you risk in comparison to what your actual account size is? If you got 10 grand in an account and you put $100 in this trade, you can hold it until it expires, because that risk ain't really too much for you, right? But if you got a $10,000 account and you put $3,000 into this trade and you down 10%, that's $300, right? You want to look a little bit more closely to it. If you take if you got a $10,000 account and you put 800 in this trade, and you down 10%, it's only $80. You ain't really worried about it, okay? But you need to define how much you're willing to lose as well. So you need to know what level you're going to get out at, and then you also want to know what is the amount that I'm willing to risk and or lose in this trade, okay? Once you have that defined, then we can sit here and we can make it happen. So now we have, like I said, this is resistance right here. And then this right here is the next day. So let's say you take an entry right here and then you're in a call, right? So you think the stock is going to go up from your entry. And then it starts to come down on a scalp, right? And let's say you're down 10% at this point, all right? So let's go to the 5-minute real quick. Now, what I would say is, as long as the stock is above the 9 EMA, you could get a bounce and it could go to the upside, right? So it bounces here and boom, I would stay in a trade, and or the VWAP, right? Sometimes the VWAP is below the 9 EMA, sometimes it's above. So the VWAP and the 9 EMA are good points, right? Good reference points on, should I stay in a trade if I'm in a call or not? Now, if you got in, and this is why you never want to get in a trade super far away from the VWAP, right? More so the VWAP than the 9 EMA, because sometimes the 9 EMA is pretty close to it, right? The stock could be trending up, and then the 9 EMA could be right there, right? So the VWAP though, right? If you get in a call and you're $2 away from the VWAP, the stock could come down to the VWAP, tap it, and then bounce up. But if you got in at the top, right, and the stock never came down to the VWAP and it comes down to the VWAP, you may find yourself down 30% on that trade, right? Down 30% on the trade, and then you get out, and then it bounces off the VWAP and it goes up. So your entry, that's why I say, what level are you getting in at, right? So you're in this trade right here, and it comes down here, right? And from here, from right here, 6502 down to 6475, you may be down 12%, something like that, right? Now you see how this is a 5 minute. I came down to the 5 minute to show you. So you see how it keeps bouncing off of this 9 EMA right here? The blue line is the 9 EMA. So boom, right? It comes down, bounces off, goes up. Come down, boom, right? But the second that the body of the candle goes below the 9 EMA and the VWAP right here, then the stock starts to come down, right? So if you're in a scalp trade, you want to get in a call, right? Either at support or once it comes over resistance and it tests resistance so it can go up, right? Or you want to get in when it's closer to that 9 EMA and you can ride it up to resistance if you want to trade like that, right? But as you can see right here, it was above the 9 EMA and it would bounce off of it and go up, right? But then it came down here and it closed below that 9 EMA. That opened the door for the stock to come lower. Now it came down here. This candle tried to come back up. It wasn't successful. This candle opened up, tested here, and boom. This is resistance, so right? So it came up, closed above it, tried to go higher, couldn't, tried one more time right here, rejected, and then boom, right? We had to push down. So that is like on a scalp trade. So you want to get out if you see it closing below there, right? That VWAP is a powerful tool, okay? The VWAP is a divider between bullish and bearish, right? So the stock is above the VWAP is bullish, as you can see right here. The stock is below the VWAP is bearish, as you can see right there, right? So that's on a scalp trade. Now let's go to a day trade. Let's say you're doing a day trade, right? Same stock. And so, and I want to say day / swing trade because sometimes, well, we'll say day trade, okay? If you plan on closing this stock, this out before the end of the day, all right? You need to know your support and resistance as well, right? So you can say, okay, here's my resistance right here, and here's my support right here, okay? As we can see, this is what happened. So yesterday, it broke out of this level right here. It came up, came down, broke above, tested, and then boom, it went to the upside, right? And then today, it came up, rejected, came down, and it held this support right here, right? So let's say you get into a trade on a day trade, all right? So you think that this stock is going to go up, right? Let's stay with the calls and on the same stock. Right? Now, you should know what the support level is. So honestly, you shouldn't be getting in above support, right? The closer you get in calls, closer to resistance, the less profit you're going to be able to make. So let's just say you are in this trade and you get into a call, right? And let's say you get into a call right here, because this looks like a bottom, right? Now, you get into a call right here. And from here, 63.82 to 64.73, that's a nice move right there, right? Boom. All right, this is the peak, okay? Now, I would say if you see this happen, this is on the 5 though, right? But if you see this happen, what is this right here? This is a lower low, okay? This is a lower low. So right here is the high of the day. So right here you got high of day, right? high of day. And then we have this right here. And this is a lower high. So if you see the stock come up and try to test the high of the day and it doesn't test the high of the day, you could get out right here, still in profit. And then if you see it break the high of day, you can re-enter into that trade, right? That's a conservative approach. I think that's a smart approach as well, right? But that is a lower high. And when a stock creates a lower high, what happens? It creates a downtrend, as we see right there, right? This is a downtrend, okay? Pull this right here. All right, this is the trend line right here. So it came up, created the high of the day, came down, right? And then it tried to push back up and it created a lower high. And then it rejected and it came lower, right? And it created a lower low right here. So if you're day trading and you think that this is support for the day, and then you see this and it created a lower high, you can get out when you start to see it come down a little bit, right? Take that profit. And then if you see it go higher and it close above the high of the day, then you can re-enter into a call because you know it's going to go to the next range right here. All right. So that is on a day trade, right? Now let's go to a swing trade. Now a swing trade, you have more time, right? So let's stay with the same stock and these levels. Okay. Because what matters is you understanding this. It ain't about the stock, right? It don't matter the stock, the price, or none of that. It's the same thing. So let's say we're on the same stock and we're trading this range right here, right? So let's say that we're trading this range right here, and this range is $63. We'll say $63 and $64.92, right? So let's just say you, for some reason, you take an entry at $63.73. All right. So you take an entry right here. All right. Now that's the middle of this range right here. Okay. So let's say you enter in and then it comes up here and it rejects. Right? Comes up here and it rejects. Comes down to this level right here. Right? Now, you got in here and you wrote it up here, and let's say you were up 70%. But you were expecting it to come up to here, 67. Now, if it comes down here and you have enough time on your on your contract, as long as it does not close below 62.99, you're good, because this is the support level of this range right here, right? This is the support level of this range, and even though you're down in the trade, you can stay in because it has not broke below this support level right here, right? So what some people may do is they may add to their position right here once they start to see it come back up. Because if it starts coming back up and it bounces off this support level, what that means is it's going to come and retest this level. And if it breaks through, then it's going to go blast off and it'll go higher. Right? So you have to know the range that you're trading in. And when you know the range that you're trading in, what happens is it becomes easier to know if you should get in or you should get out. Right? And the range is bigger when you go from scalp trading to day trading to swing trading. Right? It's much easier when you're swing trading because you'll have time on those contracts and you won't be worried about the drawdown if it does, because you know that it could recover in the time allotted with the contract's expiration date. All right. So we got the scalp trade, right? We just went over that. Then we got the day trade. We went over that. And then we got the swing trade on a daily time frame. We just went over that. All right. So now you should be confident with if you should take profits or if you should take the loss. Now here, let me say this last thing real quick, all right? And then we're going to get up out of here. If you have to take a loss, accept it and move on. Please understand that. Accept it and move on. Do not feel like you have to hurry up, right, and stay in the trade just so that the stock and your trade can go down lower and lower and lower. If you're down 30, 40% and it's not looking, and it broke the level, then take the L, because that 30% is a lot better L than being down negative 80% and then having to take that L. That's 50% of your capital, right, that you could have saved if you would have just took that L. All right. So with that being said, I hope that made sense. All right. I hope that made sense. If you made it this far, in the comments, let me know what you like doing better. Scalp trading, day trading, or swing trading. All right. Drop it in the comments. Scalp, day trade, or swing trade. Put it in the comments. What is your favorite? Which one do you like doing? Which one do you feel most comfortable with? Scalp trading, day trading, or swing trading. All right. Like I always say, make sure you get up out of your head and go get into this world, because your head is a dangerous place to live. All right. And also remember, the more you study, the less you worry. All right. I'm going to see you guys on the next video. Peace.